The financial system is mathematically programmed to drain your savings, and they won't even raise your taxes. So as the 80-year cycle peaks in 2026, they pull the soft default lever. They print trillions of dollars out of thin air. Your bank balance stays exactly the same, but your underlying purchasing power is completely vaporized.
The shadow dollar matrix, the invisible network powering global finance. Right now, a parallel financial system is controlling the price of everything you buy.
It dictates the strength of your local currency, the cost of your mortgage, and the liquidity of every stock or asset you trade. Dumping digital illusions, buying physical foundation, hard assets, energy, industrial real estate. But here is the terrifying part. This network does not belong to the United States Federal Reserve. Welcome to the Eurodollar system, the invisible architectural matrix of global capital. In this video, we expose how this offshore ghost network works, how it completely rigs the global liquidity cycle, and exactly how you must position your capital to survive its next sudden contraction. To understand how we became trapped in this matrix, we have to dismantle a massive myth. Most people believe that every US dollar in existence originates from the Bureau of Engraving and Printing or a Federal Reserve Bank ledger. That belief is entirely wrong. The domestic dollar supply is just a tiny drop in a massive, deep ocean. The true engine of global commerce is the Eurodollar. Despite the prefix euro, it has absolutely nothing to do with the European Union or the euro currency. A Eurodollar is simply any US dollar-denominated deposit held in a commercial bank located outside of the United States. Why does this matter? Because when a dollar leaves American soil and sits in an offshore bank, it escapes the jurisdiction of the Federal Reserve. This system wasn't designed by a central mastermind. It was born out of intense geopolitical paranoia during the height of the Cold War. There are no reserve requirements. There are no balance sheet restrictions. It is pure, unregulated, private commercial ledger entry credit creation. In the 1950s, the Soviet Union was earning millions of US dollars by selling oil to Western nations. But the Soviets faced a critical dilemma. If they deposited those dollars inside American banks, the US government could instantly freeze their assets at the first sign of geopolitical conflict. To protect their capital, the Soviet Union cut a deal with a French bank whose telex address was foreign euro. They moved their US dollar deposits to London and Paris. The European banks accepted the dollars and promised to return them in kind, completely shielded from Washington's prying eyes. British banks quickly realized this was an extraordinary goldmine. They could take these offshore dollars and lend them out globally at massive profit without holding any physical reserves behind them. The Eurodollar market was born, a ghost currency network built on pure ledger trust, entirely outside the control of the United States. In a traditional banking system, fractional reserve lending is strictly capped by a central authority. If the reserve ratio is 10%, a bank must keep $1 for every 10 it lends out.
To understand how this shadow network impacts your portfolio today, we have to look directly at the hidden plumbing of modern banking.
But in the Eurodollar matrix, there is no structural floor. If an international corporation in Tokyo needs a $50 million loan, a European bank can simply write those numbers into a ledger. They don't check if they have the cash in a vault. They don't call the Federal Reserve. They create the deposit balance through interbank trust. This means the vast majority of US dollars moving through global shipping, commodities markets, and international bonds are not cash at all. They are private commercial ledger promises, a massive, delicate pyramid of dollar-denominated debt built entirely on international confidence. But banks aren't foolish. They don't just lend trillions on a simple handshake alone. They require premium oil for this engine. pristine collateral. This is where the repo market, the repurchase agreement network, becomes the vital core of global liquidity. But look closer at what happens next. The bank holding that treasury bond doesn't just let it sit idle. They use it as collateral for a second loan with another bank. This process is called rehypothecation. The exact same single US Treasury bond is used to back 4, 5, or 10 different loans across the globe simultaneously.
The entire global financial architecture is now double, triple, and quadruple counting the exact same underlying safety assets.
This hyper-leveraged system works flawlessly when everyone trusts the plumbing, but when a single gear stalls, a devastating global chain reaction begins. The moment international banks sense risk, they stop accepting rehypothecated collateral. They demand the absolute real thing, physical cash dollars. This creates an immediate, violent international scramble for US dollars. Because all global corporate debt is denominated in dollars, everyone must buy dollars at any cost to avoid defaulting. This is the great paradox. The Federal Reserve can print trillions of domestic bank reserves inside America, but they cannot easily inject liquidity directly into an unregulated bank in London or Zurich. The shadow dollar matrix starves. Global liquidity dries up overnight. Asset classes from equities to real estate to digital assets experience sudden, systemic corrections. As structural capital allocators, we cannot change this matrix, but we can decode its movements to protect and grow our wealth. First, you must track global liquidity gauges rather than simple central bank interest rate announcements. Monitor the swap lines between the Federal Reserve and foreign central banks. Second, realize that a rising US dollar index isn't just a sign of American economic but it is. Third, structure your own capital with deep macro detachment. Avoid over-leveraged debt structures that rely on short-term rolling credit lines. When the shadow dollar matrix undergoes a contraction, cash isn't just currency, it becomes a highly valuable strategic option to buy premium assets at historic discounts. The global financial architecture is far more complex than the mainstream financial media lets on, but once you see the matrix, you can never look back. Gresham's law describes how bad money drives out good. This leads to the Great Dilution, or 2020's decisive value in inflation. The consequences will be severe. The 2026 reset is locked in. You can either be crushed by the shadow tax, or you can master the cycle. Decode the dilution. Link in description. If you want to know how the architects are protecting their wealth, I publish a private dossier every week called Quiet Returns. Subscribe to the channel now because the 2026 converge mathly lock. If you want to decode the institutional reset before the crowd panics, tap subscribe right now. To dive deeper into the hidden architecture of capital and master the true mechanics of global wealth movement, make sure to check out our next deep dive right here.
Because a hidden AI collapse is targeting the one sector nobody thought could be automated.